Altman's Z-score, Altman's Z-score, Altman's Z-score, Altman's Z-score. We always think about what year? The famous Waremas, to compute the 5 ratios. To compute the 5 ratios, we should always be thinking about Waremas. And then remember that these normally come in twos, Warre, the WO, and the MA. They normally come in twos like that. And then all the others will be single letters. So if we want to write this downwards, the 2, this is War, and then we have single letters RE, and then we have got MA, and then you've got S like that. So this is X1, the first ratio. This is X2. This is X3. This is X4. This is X5. And if you remember very well, this WO becomes what we call the working capital. This becomes what we call the working capital. Working capital. This becomes what we call the retained earnings. Retained earnings. Retained earnings. This one here becomes what we call the famous EBIT. This one here becomes what we call the market value. The market value of ordinary shares. The market value of ordinary shares. Market value of ordinary shares. And this becomes what we call the sales. This becomes what we call the sales. And for us to be able to change these two, if you can remember, for us to be able to change these to what here to ratios, we are dividing everything by what we call the TAR. Everything by what we call the TAR. Everything by what we call the TAR, except this one, that we shall be dividing by what here somebody. This X4 shall be dividing it with what? X4, we shall be dividing X4 with what? Somebody remind us, you guys are great students. X4 shall be dividing X4 with what here, somebody? X4, thank you very much, Javan. X4, we divide X4 with what we call the TL. The TL like that. And then if you remember very well, this TA stands for total who? TA stands for total assets. TA stands for total assets. TA stands for total assets. And then we have TL. TL standing for total what here? TL standing for total liabilities. TL stands for total what here? Liabilities like that. Total liabilities. Total liabilities. So that's quite a nice recap. And I'm so happy that most of you are able to remember what was discussed here. So then I would want us, ladies and gentlemen, in this case here straight away, to get our past papers. I know you guys have got the link to the past papers, the link to the past papers. I would want us to look at November 2020, question number 1, boy. November 2020, question number 1, boy. So somebody should be able to go to that link, pick up that paper, and if possible, please, within a second, post that paper onto our WhatsApp, November 2020, question number 1, boy. November, question number, actually 1 boy here. So November 2020, question number 1, boy, like that. November 2020, question number 1, boy. So once you're able to get that question, could you kindly just put your thumbs up like this? Zoom has got a place of you guys being able to put thumbs up as a way of communicating, Somebody has been able to pull that from the link, and then you have been able to send it to the group. I'll be so happy if I can get somebody who is able to do that for me very, very, very quickly and very fast. Very quickly and very fast. November 2020, question number 1, board. Question number 1, board. Are we there? Once you get it, could you kindly just put up your hands? Nobody has gotten it yet. Is there anybody who is trying to look for it? We need to put this link somewhere here. It's like that link. We don't have it. Ah, somebody already has sent it here. Somebody has already been able to send it here. Thank you so much. Thank you so much. Thank you so much. So I hope now all of us, we have access to that question. November 2020, question number 1B. And then what I also recommend is that when you are at the office or wherever you can get access to printing facilities, just load all those papers, print them out, have them bound nicely, and then you have an examination paper booklet for all your papers that you're doing. For all the papers that you're doing, that's what we do ourselves here. So we are told something very important there, November 2020, question number 1B. Professor Edward Altman's model for prediction bankruptcy is given as follows. I told you that Z equation will always be given. Thank you so much. So Z score equals, like you've given us there, that's 1.2. That's supposed to be 1.2 plus 1.4 plus 3.3x3 plus 0.6x4 plus 0.99x5. X1, X2, all the way to X5 are financial ratios, which according to Professor Altman, have the discriminating power, where X1 is the net working capital over total assets, X2 is retained earnings over total assets, X3 is operating profit. Operating profit is the same as EBIT. Operating profit is the same as what here, EBIT, divided by total assets. And then we have X4, which is market value of equity shares over book value of debt, including preference what year shares. And then we have, in this case here, X5, which is sales divided by total assets. Given below are summarized financial statements of Alpha Limited for the year ended 31st December 2019. So you can see sales, etc., the income statement. You can see the statement of financial position given there. In this model, AZ score of 2.7 or more indicates no signs of failure, and a Z score of 1.8 or less indicates there are signs of failure. The firm's ordinary shares are currently trading at 15 each. So they want us to give them the Z score for Alpha Limited. So for us to give them the Z score for Alpha Limited, all we need to do is to remember worry mass. And we remember worry mass is basically used to ascertain what are these 5 ratios like that. And the first ratio that we want to get is this working capital divided by total assets. Divided by total assets. I would want you guys to do me a favor. Is there someone who can calculate for us the working capital? Last time you'd even given me the formula of working capital. If I remember very well, you guys came and told me that, Mwalimu, for you to be able to compute working capital, you simply take current assets minus current minus current liabilities. Current assets minus current liabilities. Current assets and current liabilities, we shall get this from our balance sheet. So current assets, what do we have there from the balance sheet? Somebody who is able to see the current assets. Is there somebody who can see the current assets? Really, they don't want to talk to me this morning. Is there anybody who is able to see the current value of current assets? Value of current assets. Current assets, as I've already seen them. Current assets. From the statement of financial position given, 100,000, isn't it? 100,000. Thank you very much. So we have 100,000. How about down there under equity and liabilities? Is there anybody who is able to see a figure for current liabilities? Is there anybody who is able to see a figure for current liabilities? Let's talk there. A figure for current liabilities, a figure for current liabilities, a figure for current liabilities, current liabilities. Thank you so much. So if you look at these very well, you're able to see current liabilities, total current liabilities, they are 20,000. Thank you very much. So ladies and gentlemen, that our working capital there is 80,000. Our working capital there is 80,000. So then for us to look at this ratio, I would want to get what we call the total assets. I would want us to get what we call the total assets from the balance sheet again, from this statement of financial position. Is there anybody who can see the total? Is there anybody who is able to see the total assets? Somebody talk to me. Total assets, somebody talk to me. 400,000. Thank you very much, Phoebe. 400,000. 400,000. So meaning that, then we can very easily give our examiner this X1 ratio. So the X1 ratio here will be the working capital that we have, 80,000 that we really have, divided this by the total assets, which are what here, 400,000. 400,000. So you're able to give me these figures, and gentlemen, quite fast. 80,000 divided by 400,000. So Phoebe tells me 0.2, 0.2. Thank you very much. 0.2, thank you very much. Now from there, we go to X2. X2 has got something very interesting to me. It has got what we call retained earnings. And we discussed, and they say that retained earnings should be, which retained earnings? Are they retained earnings to get in the income statement, or retained earnings in the SOFP, Statement of Financial Position? I gave you some secret here. This retained earnings should be which retained earnings? I gave you some secret here. From Statement of Financial Position, always. This should be the cumulative retained earnings. You know, retained earnings in the income statement are retained earnings for 1 year, for that year alone. But here we want the cumulative retained earnings from the Statement of Financial Position. If somebody by you, I would have written here Statement of Financial what year position like that. So are you able to see that amount? Are you able to see that amount, ladies and gentlemen? Are you able to see the retained earnings in the balance sheet? Statement of Financial Position? Yes, I can see 120,000. 120,000 divided by, again, total assets. So total assets, ladies and gentlemen, total assets in this question, we already know it's 400,000. It's 400,000. So could you kindly give me this figure? 120,000 divided by 400,000. This will give me what figures about there? 0.3. And then now we have X3. X3 is EBIT divided by total assets. EBIT is earnings before interest and what here? Interest and tax. This stands for earnings before interest and taxation. Earnings before interest and taxation. So in this case here, from the income statement, are you able to see the EBIT? From the income statement, are you able to see the EBIT? Are you able to see the EBIT? Yes, from the income statement, EBIT is the same as operating profit. Operating profit. So the operating profit is 40,000. You divide this by the total assets. Divide this by the total assets again, which are what here? 400,000. 400,000. So this I can see, not unless I'm not able to see very well because it's early in the morning, but I can see this is 0.1. I can see this 0.1. 0.1. And then, ladies and gentlemen, now we go to X4. X4 is what makes so many guys not get these whole marks here. Because X4, the first thing you need to do under X4 is to come and calculate for us the market value of shares. Give us market value of shares. So for X4, give us market value of ordinary shares. How do you do this? I give you a formula. You take the nose, and then you multiply this nose with what here? With market price per share. Nose stands for number of ordinary shares. Number of ordinary shares. So you take number of ordinary shares from your balance sheet, you multiply this with the current market price per share. And then how do we get this nose? To get this nose, you simply take the share capital as it is given. You take the share capital as it is given, divided by the par value. You divide this by the par value given in the balance sheet. You divide this by the par value given in the balance sheet. So are you able to see in this question, if you go to the balance sheet, what is the ordinary share capital given there? What is the ordinary share capital given there? So in the balance sheet, if you look at the ordinary share capital, I'm able to see the ordinary share capital. It is 100,000. This is 100,000. 100,000. You come and divide this with the par value. The par value is the one given there in brackets. Par value is the one given there in brackets. Ladies and gentlemen, the par value is shillings 10 each. So is there somebody who is able to give me the nose, number of ordinary shares? Is there anybody who is able to give me number of ordinary shares? 100,000 divided by 10, 100,000 divided by 10, 100,000 divided by 10. So this is 10,000 according to 15. This is 10,000. This is 10,000, 10,000. So then this will be 10,000 number of ordinary shares times the given current market price per share. MPS stands for market price per share. Are you able to see the market price per share given there in the very last statement before required? Before required, they give us the current market price per share before required, which in this case I'm being told there by Phoebe, which is 15, which is 15. So in this case here we have 10,000 times 15. So then this will give me 150,000. Very, very important. Very, very important. So market value of ordinary shares, ladies and gentlemen, the numerator is taken care of. This is taken care of. Now we are looking for the total who? The total liabilities. Now we are looking for the total liabilities. So come here and now give us the total liabilities. Come here, give us the total liabilities. So come here and give us the total liabilities. So come here and give us the total liabilities. Come here and give us the total liabilities. Come here and give us the total, liabilities. Total liabilities, total liabilities. Now, ladies and gentlemen, total liabilities, you have to be very careful. Total liabilities, we are looking at the current liability plus any non-current liability plus any preference share capital. Any preference share capital plus any preference share capital. So anytime they want you to get the total liabilities, we normally take the current liabilities plus any non-current liabilities plus preference share capital plus preference share capital, like that, preference share capital. So then are you able to see the current liabilities in this question? So basically total liabilities represents the total debt, So are you able to see the current liabilities? Please give me the figure of current liabilities. Please give me the figure of current liabilities. Please give me the figure of current liabilities. Current liabilities. So please give me the figure of current liabilities. Give me the figure of current liabilities. Give me the figure of current liabilities. So current liabilities, somebody is giving me a figure of what here? 400,000. Current liabilities. They're telling me that current liabilities, according to them, 20,000. Current is 20,000. How about non-current liabilities? Are you able to see non-current liabilities there in form of, for example, debentures, in form of debentures. So we have here, debenture capital is 80,000. Is 80,000 plus preference share capital, which is 40,000. Preference share capital is 40,000. Yes, that's like that. So could you kindly give me the total liabilities here? Give me the total liabilities, please. Give me the total liabilities, please. 20,000 plus 80,000 plus 40,000, which gives me 140,000. 140,000. So even if the examiner doesn't tell you, this examiner seemingly is a good examiner. He told you that in debt, we also include preference share capital. That's what he told you. In most cases, no examiner can ever tell you that. It's upon you to know that preference share capital nowadays in finance is classified as a debt instrument. Please, preference shareholders, even if you don't make profits, even if you're making just process, preference shareholders' dividends must be paid. Must be paid. And at the end of the day, preference shareholders must have their money returned back. So that is why finance scholars are saying, hey, in actual sense, this preference share capital ought to be what here ought to be just a liability. So always, whenever you're looking for total debt or total liabilities, always remember it is current liabilities plus non-current liabilities plus any class of preference share capital given there. So if that is the case, then could you kindly come and substitute here? Now we have the market value of ordinary shares. The market value of ordinary shares, I have rubbed my figure, unfortunately. Is there somebody who can remind me what the market is? I remember. It was 150,000. Divide this by the total liabilities, which are 140,000. So is there somebody who is able to give me this X4 ratio? Is there somebody who is able to give me this X4 ratio? Is there somebody who is able to give me this X4 ratio? Is there anybody who is able to give me this X4 ratio? Anybody who is able to give me this X4 ratio? Anybody who is able to give me this X4 ratio? So according to Phoebe, it is, remember we put many decimal places for this one. It is 1.07 many decimal places, 4 to be precise, 4 decimal places to be precise. So 1.07, 1.07, I'm waiting for somebody to give me 4 decimal places. 1.07, 1.07, 1.07, 1.07, 1.07 something, 1.0714. Thank you very much. And then I can quote the last one, which is sales divided by total assets. Sales divided by total assets. Sales is also known as turnover. That's how the examiner confuses you. Sales is also known as turnover. So if you go to this income statement, are you able to see the turnover? If you go to this income statement, actually it is given there directly. Sales is 400,000. It's given here directly. Sales is 400,000 divided by our TAR. TAR is the total assets, which in this case here were 400,000. So then this one here would end up giving me what figure somebody there? 1.0714. 1.0714. Thank you very much. That's okay. Thank you very much. Now we have got the 5 ratios. Now with the 5 ratios, we plug them in. We plug them in the Z equation. We plug them in the Z equation. These 5 ratios, let's plug them in. The 5 ratios, we plug them in into the Z equation, which will always be provided. Which will always be done what here provided. Let's plug them in. Let's plug them in. Let's plug them in. So in this case here, we have our Z equation being equal to, we have our Z equation. Our Z equation has been provided up there. They have given us Z equation is 1.2x1 plus we have 1.4x2 plus we have a 3.3x3 plus we have a 0.6x4 plus lastly we have 0.999 x5. So we shall come and plug in the figures. So Z will be equal to 1.2x1. So x1, ladies and gentlemen, is 0.2. You already have it. 0.2 plus 1.4 times x2, which is 0.3, plus in this case here 3.3 3.3x3, which is 0.1 plus 0.6 x4, x4, which is what here, 1.0714 plus 0.99, 0.99 times x5, which is 1. So then is there somebody who is able, ladies and gentlemen, is there somebody who is able now to punch all these figures in their calculator and then they give us the value of Z? Anybody who is able to punch these figures and then they give us the value of Z there? Two point six three, 2.63, 2.63 something, 2.63 something, 4 decimal places, 2.63 something, 4 decimal places, 2.63 something, 4 decimal places, 2.63. So that is it. Go to the next part in this question. They want you to make a comment. So make a comment. So this 2.63, are you able to remember our number line? This examiner was quite a nice examiner. Our number line, we have here 1.8, we have here 2.7, 1.8, and then we have here 2.7, 2.7. Thank you, Raphael. So where is 2.63? No, first of all, before I even go there, remember we said ourselves that should we get Z being less than this? Can somebody remind us? Should we get Z being in this region, region A? Less than 1.8. What did we say? Less than 1.8, that company is a dead company, isn't it? That company is bankrupt. Less than this company is what here is bankrupt. Less than this, 1.8, the company is bankrupt. Thank you very much, Susan. And then here, 1.8 to 2.7, we say that this company is basically 50% bankrupt. Has got a 50% chance of corporate failure, 50% bankrupt. And then, of course, here, you can see this is 100% bankrupt. This is a 50% bankrupt. This will be 0% bankrupt. 0% bankrupt. 0% bankrupt means what here? Successful, basically. This would mean successful. This would mean successful. This would mean successful. Successful. So then where is our 2.63? Can somebody tell me? Is our 2.63 at A? Is it at B? Is it at C? Where is 2.63? Where is 2.63? There are 3 sections basically at B. So in this case here, we are saying that this company, they gave us the name of the company. This company, they gave us the name of the company. They told us that this company is known as who? This company is known as, they must give us the name of the company, Alpha Limited. So Alpha Limited, because 2.6 is somewhere here, 2.6 is somewhere here, tell us there that Alpha Limited has got a 50% chance of failure. Has got a 50% chance of what here? Failure. It has got a 50% chance of failure or 50% chance of failing. 50% chance of failing. Because 2.63 is here. Is in between here. Is in between there. Is in between there. Okay. So is there anybody who has a question really there? Anybody who has a question regarding this? Anybody who has a question regarding this? Is there anybody with a question regarding this? If there is none, I would want us to try one ourselves. Yes. So this is our second class, basically. It's our second class. We are still working on reconstruction and reorganization. Reconstruction and reorganization. So then I would want us straight away to look at another question here. which was in 2022, I think. 2022. This is the most recent question that was tested, capturing the Altman's model. Yeah, December 2022. December 2022, question number 4B. December 2022, question number 4B. So you're looking at December 2022, question number 4B. 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 December 2022, question number 4, boy. Once you get it, please. Last EBIT, no problem, Joyce. EBIT, remember EBIT is the same as earnings before interest and tax. EBIT is the same as this EBIT. And at times, in this case here, this earnings, of course, is profit. All right. So it can be called EBIT or PBIT. PBIT, very important for you to know this. And remember that PBIT or EBIT is the same as operational or operating profit. So if you look at your income statement, Joyce, you'll be able to see the operating profit. If you look at the income statement, then you'll be able to see the operating profit. Please confirm in the income statement whether, Joyce, you are able to see the operating profit. Can you kindly confirm? Can you kindly confirm? Great. Great. So then, have we been able to find this question, December 2022 question 4B? Do we have it? 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 Do we have this question? Do we have this question? Somebody should be able to send it in the group. December 2022. Question number 4, boy. Abracadabra, they're not talking to me. Abracadabra, they're not talking to me. We are told here the Altman's formula for prediction of bankruptcy is given as follows. So it's given as 1.2x1 plus 1.4x2 plus 3.3x3 plus 1x4 plus 0.6x5. Where x1 is given like that, you are provided with the following information in respect of 3 listed companies. So we have company A, they have given us working capital retained earnings. We have earnings before interest and tax, also known as operating profit. Then we have got market value of equity. We have total assets, and then you have total liabilities, and then you have got sales. So for company A alone, I would want somebody to compute, ladies and gentlemen, the Z score for company A alone. We start with company A alone, and that one I'm giving you exactly 5 minutes. Exactly 5 minutes. Let's get to hear what you guys would have done in an exam. This question was a very interesting question. You know, as an examiner, I would want to ensure that I throw most of you off the bus. Actually, I would want to throw all of you under the bus, which is written KASNEB, going to KASNEB, students who are going to pass to KASNEB like that. And then I should be able to squeeze you out of that bus. I throw you under the bus. Because you can imagine, this examiner gave you the formula of getting X1 to X5. And then he wanted to joke with you because we know students are so much used to ORMAS. But now I twist something small. I twist something small, which of course, upon twisting it, I'm so sure that I'll be able to throw over 75% of the students under the bus. That's how good examiners do. Good examiners should be able to know how to tweak questions so that students should be able to get out of the exam room as they walk with their heads high. If they have a high-heeled shoes, wanakanyaga. Lakini exam ikikuja, wanasema amerogwa. Kumbe basic things hawajui kufuata. Kama sauti vizuri question, wamekuambia, this question, if you look at it nicely, what have they told us about X1 to X4? You can't use watermarks here. You can't use watermarks here. You can't use watermarks here because we interchanged X4 and X5. We interchanged X4 and X5. And because we gave you the formulas, we expect whenever you're given formulas, even if it's a wrong formula by the examiner, always use the formula that the examiner has given you. Is there any student who was able to see that trick? Is there any student who was able to see that trick? Any student who was able to see that trick? Okay, let me ask you a question. Is there somebody who used to watermark directly? Is there a student who used to watermark directly? You guys are not talking to me. I'm a nice guy. I'm not a sadist of an examiner. I just want to help you. And Raphael, I would have in this case here managed to throw you outside the bus, which would have been quite unfortunate, but it is. That's what it is. Because you see under watermarks, sales is the last one. If you look at this one, under this one, ladies and gentlemen, under this one, ladies and gentlemen, sales is the fourth one. So we have X1. So X1 is net working capital, and the working capital for A, this is company A, this is company A. So X1, company A, working capital is 4,000 divided by total assets of company A, which in this case is 200,000. 200,000. Could you kindly give me this figure for X1? Kindly give me this figure for X1. 40,000 divided by 200,000. 40,000 divided by 200,000. This one here will end up giving us what figure? 0.02. Is it 0.02 or 0.2? Or 0.02 because of 4,000, yes. Thank you so much. Then go to X2. What does X2 dictate there? X2 wants us to take retained earnings over total earnings for company A. Retained earnings, we have 60,000. All over again, total assets there, which are 200,000. All over total assets there, which are 200,000. So then this X2 will be equal to 0.3. This will be 0.3. Thank you very much. And then we have X4. We have X4. X4, which will be equal to X, not X4, X3, sorry. X3. X3 is EBIT. EBIT, earnings before interest and tax, which I can see 100,000 divided by total assets. Total assets, ladies and gentlemen, they stand at 200,000. Is there somebody who is able to see that this is 0.5? Is there anybody who is able to see that this is 0.5 really? Is there anybody who is able to see that this is 0.5? 100,000 divided by 200,000? Is it 0.05 or it's 10,000? Thank you very much. It is 10,000. It is 10,000 divided by 200,000. So it is 0.05. You guys are right. It is 10,000. And then we go to X4. So X4, please work with the formula given to you by the examiner. When I used to be young, I used to harass students a lot in terms of this. I twist, I give you a formula different. So for example, like under X4, they're telling me it is sales over total assets. Sales is 200,000. 200,000. All over total assets, which are 200,000. 200,000, which is 1 there. And then we go to X5. So X5, ladies and gentlemen, X5, ladies and gentlemen, X5, ladies and gentlemen, X5, ladies and gentlemen, they have told us here for company A. It is market value of equity. Market value of equity they have given us. Market value of equity they have given us. 20,000, I mean. 20,000. 20,000 all over market value, or rather book value of debt. So have they given us debt really here? Have they given us debt here? Is there anybody who is able to see the book value of debt? Anybody who is able to see, I can see liabilities. I can see liabilities. Is there somebody who is able to see the liabilities, book value of debt? You know, book value is what is written there. Book value is what is written there. These guys are not talking to me. So in this case, I should take 20,000 divided by the total liabilities, which are what they are, 120,000. So can you kindly give me this figure? This must be 0 point something. X5. First of all, give me 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 X5. 0.1667. 0.1667 like that. So once you have this for company A, please go ahead and give me the Z for company A. And the Z score equation has been given to you by the examiner. Always use the one given to you by the examiner. Never cram this one. Z score equation will be given to you. So this 1.2x1 plus 1.4x2 plus 3.3x3 plus 1x4 plus 0.6x5, 0.6x5. So then we have here 1.2x1. So x1, what is the figure? It is 0.02 plus 1.4x2. X2 is 0.3 plus 3.3x3. X3, gentlemen, is 0.05 plus we have here that's 3.3 times x4. Nope. X3. Yes. Plus, in this case here, 1 times x4, which is 1 as well, plus 0.6 times x5, which is 0.1667 like that. 0.1667 like that. 0.1667 like that. So are you able to give us the final Z figure? Please give us the final Z figure. Please give us the final Z figure. So the final Z figure, according to Raphael, is 20092. Thank you very much. 2.0092. 2.0092. So for company A, can you kindly make a decision? Can you kindly make a decision? Make a decision there for company A. So for company A, make a decision there for company A. So we have here 1.8, 2.7. So for company A, could you kindly make a decision? Yeah, where does it belong? Company A, 2.00 something is here. Is at B. Is at B. Therefore, the name of the company A has a 50% chance of corporate failure. Of corporate failure. Because you see here, is failed 100%. This is 50% chance of failure. This success. So all of us, are we comfortable with this figure? Are we comfortable with that figure, all of us? They are not talking to me. They are not talking to me. Are we comfortable with this figure, all of us? Are we comfortable with this figure, all of us? Are we comfortable with this figure of 2.0092? Yes. Thank you very much. And then if it's 2.0, 2.0 is more than 1.8, but less than 2.7. It falls in this number line. So it's at B. And if B, if you remember, B is about 50% chance of what here? Bankruptcy. 50% chance of corporate failure. 50% chance of corporate failure. So that is company A. So company B and the company C, I want to believe that you guys can now be able to compute for me these at your own time. And then you compare notes. Is that okay? Company B and the company C. Company B and the company C. I want to believe that you guys will be able to help me in that. Is that okay? Great. Thank you so much. Thank you so much. Thank you so much.